NIO stock closed Tuesday's trading session with only a modest gain, finishing the day at $6.93 per share. That's up just 2 cents, or about 0.3%. On the surface, this looks like a flat, unremarkable session. But the details of how the day unfolded are more interesting. For much of the trading day, NIO traded above the $7 mark, a level that has become both a psychological and technical battleground for the stock. Bulls pushed the price higher, attempting to sustain momentum from last week's rebound. But by the end of the day, sellers stepped back in, forcing the stock to dip back below 7 and closing just shy of that threshold. So what does today's action really tell us? Is this simply consolidation before the next leg higher? Is resistance at 750 still too strong to overcome without a new catalyst? And how should investors interpret the mixed signals of strong order demand for the new ES8 SUV combined with reports of delivery delays? Let's take a closer look at what happened today, why the stock behaved the way it did, and what it means for investors moving forward. First, some quick context. Just yesterday, NIO sold off sharply, dropping 6.2% to close at $6.91. That decline was driven by a combination of factors: profit taking after a 20% rally from the $6 floor, technical resistance near 750, reports of delivery delays for the ES8 SUV, and broader concerns about overcapacity and price wars in the Chinese EV market. Today's small rebound might not look like much, but it came after a turbulent Monday. The fact that the stock managed to claw its way back above 7 during the session is significant. It shows that buyers are still active, testing whether 7 can turn into a reliable support level. So why did NIO slip late in the session? The first reason is technical. $7 has now become a tug-of-war level. It's a line in the sand where buyers want to prove that support is holding, but where sellers are quick to step in if momentum fades. That's exactly what we saw today. Early in the session, bullish traders pushed NIO higher, perhaps encouraged by fresh analyst commentary and optimism around order numbers. But by the afternoon, sellers reasserted themselves, unwilling to allow the stock to stay comfortably above 7 without stronger catalysts. The second reason relates to the news cycle. There have been conflicting headlines about the ES8 SUV. On one hand, Deutsche Bank recently reported that NIO has secured about 100,000 cancelable orders for the third-generation ES8. That figure highlights strong consumer interest and suggests that demand for NIO's latest premium model is solid. But on the other hand, reports surfaced about delivery delays, raising concerns about whether NIO can execute smoothly and convert those orders into actual deliveries and revenue. This combination of strong demand but uncertain execution creates mixed sentiment in the market. Third, we need to talk about analyst sentiment. UBS recently upgraded NIO, pointing to stronger performance from its new models and the healthier balance sheet after the $1 billion equity raise. That kind of upgrade provides credibility and helps explain why buyers were willing to test $7 today. It reassures investors that, at least from a fundamental perspective, analysts see the potential for upside. But upgrades alone aren't always enough to overcome technical resistance or short-term skepticism. Finally, we can't ignore the broader sector backdrop. The Chinese EV market remains hyper-competitive. Tesla, BYD, XPeng, Li Auto, and now Xiaomi are all cutting prices to protect or grow market share. That has driven average selling prices lower, putting pressure on margins for all players. NIO's average selling price has fallen from $38,000 last year to around $31,000 today. Even with strong demand, those falling prices make profitability harder to achieve. At the same time, reports of overcapacity in the industry and concerns about the eventual expiration of EV tax breaks in China add to investor caution. So where does this leave us? Today's action looks like part of a consolidation phase. After last week's breakout above 7, followed by Monday's sell-off, the market is testing whether NIO can hold around this level. It's not unusual for a stock to spend time consolidating after a sharp move, especially when there's conflicting news and no clear near-term catalyst. From a technical perspective, here's what matters. Support at $7 is critical. NIO spent much of today above that level, but couldn't hold it into the close. The battle to reclaim and hold 7 will be the key storyline in the coming days. Resistance remains near 750. Last week, NIO tested this level and failed to break through. Until the stock can decisively clear 750, upside momentum will remain capped. If support fails, 650 becomes the next downside level to watch. That's where buyers are likely to step back in if the stock retreats further. On the bullish side, fundamentals remain encouraging. Deliveries are strong. August was a record month with 31,305 vehicles delivered, up 55% year-over-year. The second quarter also showed growth, with 72,000 deliveries, revenue of $2.7 billion, and gross margins improving to 10%. Losses narrowed to $567 million, showing progress even as competition intensifies. The equity raise, while dilutive, has strengthened NIO's financial position. With an additional $1 billion in the bank, the company has the runway to continue funding research and development, expanding its battery swap network, and launching new vehicles. These investments are crucial for long-term competitiveness. And then there's NIO Day 2025, coming up on September 20th in Hangzhou. This annual event is always a key moment for the company to showcase its latest technology, models, and strategic vision. Investors are expecting to hear more about the ES8, the Onvo L90, and the Firefly Compact EV brand. Even if delays are real, NIO Day still provides an opportunity for management to reassure investors and rebuild excitement. That event is now just days away, and anticipation could provide a tailwind for the stock in the short term. Of course, risks remain. Execution risk is front and center. If NIO struggles to deliver on its ambitious product roadmap, investor patience could wear thin. Price competition is relentless, and falling average selling prices are squeezing margins across the industry. Dilution from the equity raise is still fresh in investors' minds, and will remain a factor in how the stock is valued. And macroeconomic uncertainty in China, from weaker consumer demand to shifting subsidies, adds yet another layer of risk. Still, today's session shows that despite all these challenges, buyers are not giving up. The fact that NIO spent much of the day above 7 is encouraging. It suggests that investors see value at these levels and are willing to defend the stock. The late dip is a reminder that resistance remains strong, but it doesn't negate the broader progress. For traders, the key will be watching whether 7 becomes reliable support in the coming sessions. If NIO can reclaim that level and hold it, then another test of 750 is likely. If 7 fails, then 650 could come back into play. For long-term investors, the focus should remain on fundamentals, deliveries, product launches, the expansion of the battery swap network, and how effectively the company uses its new capital. NIO Day will be a particularly important moment, and how the market reacts to that event could set the tone for the rest of the year. So how should we interpret Tuesday's modest rebound? In my view, it's a sign of cautious optimism. Buyers are still in the fight, testing whether 7 can hold. The fact that the stock couldn't stay above that level into the close shows that resistance is real, but the story isn't over. This looks like consolidation, a pause before the next move, rather than a breakdown. In summary, NIO closed Tuesday at $6.93, up 2 cents on the day. The stock spent much of the session above 7, but dipped late as sellers re-emerged. Key factors include technical resistance, reports of ES8 delays, strong but uncertain order demand, analyst upgrades, and a hyper-competitive Chinese EV market. Support at 7 and resistance at 750 will determine the near-term path. Long-term, deliveries, product expansion, and NIO Day remain reasons for optimism. For now, this is a time for patience and careful observation. NIO is consolidating, building a base, and preparing for its next big test. The question is whether that test comes in the form of a breakout above resistance or a retest of support. Either way, investors should stay tuned. The story of NIO is still unfolding.